Japan ended their process of quantitative easing, and the U.S. market pulled back 7%, and the emerging markets fell into a bear market. But the markets rebounded very quickly because we weren't at the end of the credit cycle. I think that's going to be the case again this time.
All right, Jeff, thank you very much for joining us. We do appreciate
Thanks,
it.
Aaron.
Two thoughts for viewers before we go. One, first take a look at the only stock up this much, Radio Shack, RSH. That company coming out with earnings up 12%. You got to look hard to find a stock like that today, because right now the Dow is off 342 points. We just saw it jump from 298 to 342. A big plunge, and let's hand it off right now to the closing bell. They're following it for you. Let's send it off to Maria and Dylan. A global sell-off spilling onto Wall Street today. The Dow Jones Industrial Average now down 462 points. We are seeing sharp declines across the board. Concerns about China's growth outlook putting investors on edge. The Dow and the S&P 500 giving back all of the gains in 2007. We are entering the final and most important hour of the trading day.
Well, hey, Maria, we're just looking. There's a gap lower, literally 180 points just added to the declines in the Dow Jones Industrial Average. You can hear the hollering on the floor. We're down 260. Right now, the indication is 471. I was just talking to some traders while you were summarizing the market, trying to figure out why there was such a significant gap lower again from the 260 level to now the 470 level on the Dow Jones Industrial Average in a matter and literally in a split second. The belief when you talk to the traders is, at first people thought it was a bad print, but again, it is holding now down 475 on the Dow Jones Industrial Average, which is starting to blow through the biggest decline that we saw right before the U.S. invaded Iraq in the spring of 2003. The belief right now off from the traders on the floor is that series of trades queued up, sell orders queuing up that were up against the trading curbs that had come into effect, that those curbs release, and now the market is extending itself, moving towards a 500-point decline. Going to the beginning of this story, it began in China. It was not a fundamental economic issue, but so much one about speculation in the stock market, Maria. Again, concerns that there was too much speculation. There's talk about legislation in China to reduce the ability to borrow money to invest into that stock market. We had the ripple around the world, 1 to 2%. But now we truly are extending. The Dow Jones Industrial Average now crossing 500 points, Maria, on the decline.
Yes, it is at 12,124 on the industrial average. We are watching this with this market sell off. Just spoke with one trader on one of the upside trading desks, and he tells me that there are programs really that are kicking in right now as we enter this final hour, and that is what is really accelerating things. Sell programs as we watch this market plunge. There is a tick by tick chart of what is going on right here, and as you see, it was just about 259 or so 3 minutes ago when the industrial average went from down just about 200 points to down 470, and then down another several points, and now down to 543 points lower. We are looking at worries over China's growth story. We know that we had a global sell-off overseas, and it was led by China, and the worries about an overheated situation there. This just one day after Alan Greenspan suggested that, in fact, we could at some point see a recession. Dylan's on the floor right now with Scott Wapner, taking a look at all of the sectors. And I would say, really, take a look at the financial services group, Scott, and Dylan, and tell us what you see there in terms of the leadership on the downside. Yeah, where's the volume as well?
The volume is across the board. I mean, we're at 500 points on the Dow Jones Industrial Average. Biggest decline since
September 17th, after 9/11. Let me point something out. We talked about the volume, 1.7 billion shares today. Look at the down volume. If you guys, I don't know if you get a shot of this. If you turn, look at the down volume. Can you swing the camera up and look at that board? Look at the down volume compared to the up volume.
DVOL, that's where that is on that board. Right. Second column, if you're watching at home, says DVOL in 1.7 billion down trades.
One trader on the floor here told me earlier that in his 20 years on the floor, and this was before the losses accelerated to the levels there are now, he had never seen a spread like that. It's just amazing when you look at the up volume compared to the down volume to show you the momentum of the downside that we've seen today.
The interesting dynamic about this, and Maria, you would know this as well as anybody, having spent as many years as you have on the floor of the exchange. They're real. The China catalyst was a real catalyst for a real sell-off in China. it if you talk to the traders, because it had to do with being able to borrow and leverage up to buy that market. The sell-off around the world was relatively moderate. 500 points on the Dow Jones Industrial Average, the biggest down day in percentage terms since we reopened this market after September 11th, is a reflection not of any economic cataclysm.